Hi Clayton, my name is Alana. I currently have one rental property in a small town in the Midwest with really low turnover rates. I have moved to Washington, D.C., where the real estate market is very different. I'm looking to buy my second property with my first home's equity, and I was wondering your advice on buying a property in a more volatile market versus having the safety of a smaller town. Thank you.
Thank you, Alana. Well, I mean, I'm not a fan of volatile markets. I like boring, conservative markets with a number of growth potentials. We'll have a link in the description for you to check out another video that we've done here on what I look for in rental real estate markets. So please be sure to check out that video. But just to give you a high level example, I want low crime. I want I want population increasing, not decreasing. This is important. I would check your census data to see what is when you say volatile, what does that mean? Does that mean that people are leaving? Jobs are leaving? I don't know that I would want to invest in a town like that. I can tell you the answer is no, I would not. Are Fortune 500 companies coming there? Are they building new universities, hospitals? Is crime low? How are the schools? Like, we only build our houses in the best school districts. That's our main focus. We will buy land and build properties specifically in the best school districts. So when you say volatile, is there a lot of crime? Are the school districts not so good? So you have a lot of people that are transient. Is it a one-horse town, meaning there's only one employer in the town? So I would seriously consider looking at, if you're going to use that equity, which I'm a big believer of, if you're going to use the equity in your home, because you can't eat equity, taking that equity, using that as a down payment in some form or fashion, and then using the bank's money. I mean, we're seeing the record low interest rates, under 3% this week. I think 2.78% for a 30-year fixed mortgage this week. That is unprecedented. That is basically free money when you take into account inflation and the fact that you're cash flowing on top of that. You're not only a hedge against inflation, you're beating it, because then you get the tax benefits of it. So you're getting this free money from the bank in order to buy an investment property. And let me just say this, I was speaking to someone the other day who's just getting started in real estate investing, her and her husband. And she said, can you invest like in other towns outside of where you live? And I said, yeah, built a whole business around that. That's what we do. Because remember, the best properties, the best rental properties are not in your backyard. They're not. They're going to be in other markets that hit those demographic numbers. Are they pandemic proof? Unlike, Orlando and Las Vegas, when the pandemic hit, all of the tourism dried up and all of those casinos shut down. So are you in one of those markets, or are you in a safer, more conservative market? Again, are there jobs growing? Are there good paying jobs? What is the environment like for landlords? Texas, where we do a lot of our building, is landlord friendly. So it's very low issue with, if there's a tenant that's not paying, not COVID related, but if there's a tenant not paying because they just go in the property and they don't want to pay the rent. That's happened to me. Not in Texas. It's happened to me in New Jersey, where then it's not a landlord friendly state. It took us over a year to get this tenant removed from our property, and she knew exactly what she was doing. She was specifically squatting in this property. She moved in and had no intention of paying. And then she knew the New Jersey laws. She knew that it would take nearly a year. We spent thousands of dollars hiring a lawyer, which you have to do in New Jersey, go through that whole process. So that is not a landlord-friendly state. Texas, however, can have an eviction in 2 weeks if a tenant tries to pull something like that. So you need to know what type of state you're dealing with as well. State laws can be very important. And of course, crime, school districts, all of those things. Just be very smart and do your research. Do your research on census data, look at crime statistics, look at population growth. All of those things are very important for your success in rental real estate investing. If you have a voicemail question you'd like to ask, again, go to our website, go to morrisinvest.com/Clayton. And again, while you're there, grab our 90-day financial freedom bootcamp. Again, we put a lot of work into this, and it's totally free. Download the PDF. It's like 30 pages or so. And we take you through week to week to week. And we're going to make you do homework. We're going to make you put stuff on a calendar and really map out your financial future. And I think it'll be transformative. We've had thousands of people download our bootcamp, and they've had unbelievable success. So take advantage of it. It's totally free. We built it for you. We want to see you succeed. Thanks, everyone. Now go out there, take action, become a real estate investor. I believe it's the number one way to build wealth. We'll see you next time, everyone.